Welcome back to the channel. In this playlist, I will explain credit management in SAP S4HANA, and I will start today with an introduction. So what is credit management? Companies usually sell their products to customers on a credit basis. They sell the products today and they receive money from the customers in the future. And there is always a risk that a customer doesn't pay his credit for any reason. To minimize this risk, a company would always evaluate the creditworthiness of a customer before doing any business with them. To do this, the company would obtain information from external and internal sources. An example of external sources is credit agencies. These are agencies that study the creditworthiness of different customers, and then we can pay them money to obtain this information. For internal sources, for example, if the customer is already doing business with another sister company in the same group, so we can evaluate his performance. Does he pay his credit on time or not? And based on this information, we can determine a credit score for the customer that can be between 0 and 100. And based on the credit score, we can determine a risk class. So for example, if a customer has a credit score between 80 and 100, this is a low risk customer. There's a very high probability that he pays his credit on time and we can trust him. So we will allow him a very big credit limit. For example, he can buy from us for the value of 1 million USD without paying anything. But if a customer has a low credit score, for example, between 0 and 40, this is a high risk customer. There is a very high probability that he does not pay his credit, so we cannot trust him. And for this, we can either decide that we are not going to work with him at all, or we will allow him a very small credit limit. For example, he can buy from us for the value of 10,000 USD without paying. This is the first part of the credit management process, where we maintain the details of every customer and the conditions based on which we agree to work with him. In the second part, we perform a credit check. Whenever we create a sales order for this customer, we are going to review his credit status. And if the customer exceeds his credit limit, we are going to block the sales transaction. And here we have two options. Either we reject the transaction directly when saving the transaction, which means this customer cannot have any other sales documents with us until he pays part of his credit limit, or we would allow the creation of the sales transaction, but it would be created in a blocked status, and then a credit analyst has to analyze and either approve or reject the transaction. In the third part of the process, we review the different blocked sales documents and the different reports, and we decide whether to approve or reject every sales document. And this has to be very well documented and integrated with approvals workflow. Only the authorized person can approve the sales transaction. This is the general simple layout of the credit management process, but the process can actually be very complicated. For example, in credit check, we can say that we are not going to check only the credit limit, but we also want to check many other key figures. For example, when was the last time we received a payment from the customer? What is the oldest open item? What is the days of sales outstanding? And many other key figures. We can also say that the same customer can have multiple credit limits within our company. So for example, if we sell to this customer from the division of home furniture, we want him to have a credit limit that is separate from if we sell to him from the division of electronics. We can also say that a customer has its own credit limit, but this customer belongs to a group of customers. For example, if we are working with a chain of supermarkets, so every branch of the supermarket has its own credit limit, but also all of the branches have a global credit limit on the level of the head office that all of them cannot exceed. We can also have a customer that's working with our company in different locations. So we have a company code in France and a company in Germany, for example, working with the same customer. And we want this customer to have a separate credit limit in every company. So one credit limit in France, one credit limit in Germany, but we also want to have a global credit limit for the customer in all our companies. So both France and Germany cannot exceed a certain credit limit. In the next videos, I will go into the details of the credit management process and how SAP S4HANA can satisfy all of these business requirements. So if you are interested, don't forget to subscribe to the channel and also leave me your comments. Tell me what do you want to see in this playlist. I hope you found this video useful. Don't forget to check the full playlist here or click here to see the next video. You can also check other recommended videos up there. Thank you for watching and I'll see you again soon.